Welcome, Amit and Mita. How can I assist you today?
Dr. Ada, we've been feeling a bit unwell lately. We thought it's best to get some blood tests done.
Yes, Dr. Ada. We're just worried about our health.
Of course, it's always wise to prioritize your health. Don't worry, we'll get you the necessary tests. Arjun, please prepare for a blood test for Amit and Mita.
Sure, doctor.
I hope this doesn't cost us too much. Healthcare expenses can be quite high.
I know, Amit. We should have checked our health insurance first.
I understand your concerns, Amit, Mita. Healthcare expenses can be a burden. It's essential to be prepared. Just like you prioritize your health, planning for expenses is equally important.
But Dr. Ada, what exactly are expenses?
An expense is like the money a company spends to make money. It's simply what you have to pay to get something you need. Common expenses for a company include things like paying the suppliers who provide materials, paying employees their wages, renting a factory or office space, and accounting for the wear and tear on equipment.
All right, Amit, Mita. We're ready for the blood tests. Please follow me.
Thanks, Dr. Ada, for explaining expenses. We'll make sure to plan better next time.
Yes, thank you for your guidance, Doctor.
You're welcome. Take care of your health and remember that being financially prepared is very useful for the future.
What types of expenses do we have?
There are different types of expenses.
You know, Amit, I've always been curious about the different expenses that businesses have. They must be more than just buying stuff, right?
Absolutely, Mita. Expenses in business are like the everyday costs of running a household, but on a larger scale. There are various types of expenses, each serving a different purpose.
Can you give me some examples?
Sure. Let's start with operating expenses. These are like the everyday bills of a business, such as salaries for employees, rent for office spaces, utility bills to keep the lights on, and even office supplies like pens and paper.
So it's like how we have to pay rent and electricity bills at home.
Exactly. Now there's another one called cost of goods sold, or COGS. This includes all the costs directly related to producing the goods a company sells. For example, if you're running a bakery, the cost of flour, sugar, and butter would be part of COGS.
So it's like the ingredients a restaurant needs to make its dishes.
Precisely. Next up, we have selling, general, and administrative, or SG&A expenses. These cover all the non-production costs like sales commissions, advertising expenses, and even salaries of top executives.
So those are the costs involved in selling and promoting the products.
Yes, you got it. Now, interest expense is the cost a business incurs when it borrows money, often in the form of loans.
That's similar to the interest we pay on loans or credit cards.
Right. Lastly, we have taxes. These are compulsory financial charges imposed by the government to fund various public expenditures. Businesses pay various taxes like income tax and sales tax.
Just like how we pay income tax and sales tax on our earnings and purchases. But are there any rules or restrictions when it comes to how businesses can spend their money?
The world of business comes with its own set of rules, and one of them involves restrictions on cash transactions, especially under income tax laws.
What kind of restrictions are we talking about?
For example, if a business pays someone more than Rs. $10,000 in cash for an expense, there's a problem.
What's the problem?
If a business does that, the expenses paid in cash won't be considered for tax deductions. In simple words, businesses can't deduct these expenses from their taxes.
So it's a rule to keep things transparent and prevent big cash payments.
Exactly.
What else is there?
And there's another rule. If the total cash transactions in a day exceed Rs. 10,000, those expenses for the day won't count for tax deductions either.
So it's not just one payment, but all the cash payments in a single day.
Right, Mita. These rules help businesses keep accurate records and make sure everything is transparent when it comes to spending money.
Thanks, Amit. This is important to know. Business finances can be quite tricky, but how do we know if expenses are good or bad for a business?
We can calculate the value of expenses by comparing them to revenue. If the revenue we earn is more than our expenses, we make a profit. But if expenses are greater, we face a loss.
So it's like a simple math equation?
Total expenses equal net revenue minus net income. If it's a positive number, we're making a profit. If it's negative, we're incurring a loss.
I heard about this thing called depreciation and another one called amortization. Can you help me understand what they mean?
Of course, Mita. They both involve expenses related to assets, but in slightly different ways.
Assets? What are they?
Assets are things a business owns that have value, like a company car, a building, or even patents and trademarks.
Okay, got it. So what's depreciation then?
Depreciation and amortization are about how a business accounts for the value of these assets over time. Depreciation is when a business spreads out the cost of a physical asset over its useful life. For example, if a company owns a delivery van, they don't want to show the full cost of that van as an expense in one go. Instead, they spread that cost over several years, and that's depreciation.
And what's amortization?
Amortization is similar, but it's for intangible assets like patents or copyrights. These aren't physical things, but they still have value. So, businesses expense the cost of these intangible assets over their useful life, just like depreciation.
Now I got it.
I hope you didn't wait that long. This is your reports. This is fine. Maybe you have a little cold because of the weather change.
Thank God, I am very happy to know this.